let's now address what the market construct is looking like. And Kunal and Nooresh are here with us as always. Kunal, what a day turned out to be yesterday. A 100-point move made it to 23,500 and seems like today is another 100-point dash in the offing.
Yeah, I think it's a very slow, steady move for the indices. Much more on the positive side for the market breadth, because that's where we've seen the real action shaping up. 5% up for the small cap index, relatively from that 3rd June close. For the indices, and the mid cap index has also done pretty well. It's almost 3.5 to 4% higher from those levels. That itself tells you the market texture so far, that it's more broad based this time around. We've seen many of the sectors, many of the large cap names participating. Yesterday was also one of the few days where you saw a lot many large cap names coming back into a positive price action for themselves. The India VIX is still trading below the 200 DMA. That's around the 13 odd levels so far for the asset. So I think that's also adding to the positivity for the index. And the key was yesterday the index breaking past about 23,500 mark. We were discussing this a couple of days back, that maybe after a couple of days of pause, the index could break past about those levels. And when that happens, we are now looking at a fresh base which could probably establish at the 23,500 mark. So I would now believe that after this 100-point jump, if we sustain this level for say the next 1 or 2 days, we could be looking at a fresh support which rises from 23,200 for the Nifty to now 23,500.
All right, let's find out what Nooresh's take is. And Nooresh, not just the frontliners, the broader markets as well, roaring ahead. Would you believe that we've already seen a 2,000 plus recovery at 23,550 plus levels? Where to from here?
So from here on, the trend remains positive, and the key lies in the fact how Bank Nifty performs. Because Bank Nifty post-COVID has been an underperformer for compared to the Nifty for a long time now. And what we've started seeing is we have started seeing a good enough consolidation in a lot of large private banks. So the large private banks are making a case for a possible breakout going forward. So if you look at the large banks, HDFC Bank first has started sustaining above 1,600. You have ICICI Bank holding it in 1,100, just 2-3% away from an all-time high. Same is the case with Axis Bank, 2-3% away from an all-time high. And IndusInd Bank has been stuck around that 1,500 mark. So if the Bank Nifty breaks out, we can take a move towards 23,800, 24,000 also on the Nifty. So the view is Bank Nifty could lead from here, and specifically private banks which have consolidated well. So the view is to look at banking names on the private side.
If you like this video, then like, share and subscribe to ET Now.